Now you've been approached by someone who wants to buy your business. Now what should you do next? First, you need to evaluate how serious they are as a buyer. And you do that in two ways. First, you want to see if they're qualified to actually run your business. So if you run a company that requires a license and this person clearly isn't going to qualify for the license, they're probably not a serious buyer. If they have no industry experience, they have no sales experience, if they have no management experience, they're probably not a serious buyer. A lot of people on social media, a lot that are telling buyers that they can just buy any old business and go put a manager in place. They don't need to know anything about it. And that's just really not true. So one of the biggest reasons why loans to buy businesses tend to default is because a buyer is buying in an industry that they have no experience and that they don't know anything about. So lenders, when they go to actually do the loan for this potential buyer, they're going to take that into consideration. So if someone's approaching you and they think that they can buy your business even though they know nothing about your industry, they're probably not going to qualify for the SBA loan to buy the business. Serious buyers are much more focused, and they're focused on buying businesses within industries that they know and understand. Second, you're going to need to qualify them financially. And in a way, this blends with step one. Really, you're trying to evaluate, are they going to qualify for an SBA loan? And typically you can get an SBA loan up to about $7.5 million. The way you do that is called a pari passu loan. $5 million comes from the SBA. You have a bank that usually gives about another $2.5 million of conventional lending. So these buyers can get up to $7.5 million. There are even some banks that will go up to 10. Now, for those larger loans, the down payment requirement is going to be 5% at most banks. It can come down to as low as 2.5% up to $5 million if someone is buying within an industry that they have experience. So when you're qualifying the buyer, really that SBA loan program is really going to focus a lot on their qualifications. So if you've done step one right, you've done a lot of the work on their financial ability to actually buy your business. You might want to look at some personal financial statements or some proof of funds. But when you're looking at that, make sure that you understand that they likely only need 2.5% of the purchase price. So you're not looking for a huge amount of cash in their checking account. And that's something that most of our peers don't understand at all. We see that virtually, maybe 1 or 2% of business brokers actually understand the loan market and what you need. We see people saying you need 20, 30% down all the time. No, you don't. Buyer only needs to come with, really, you could round it up to 3% because there are going to be some additional costs on top of the purchase price. They're going to bring cash for working capital. They're going to need lawyers, and the SBA charges what's called a guarantee fee. So if you want to be safe, look for 3%, but that's really all you need to see proof of funds from a potential buyer. Now, if you're selling to someone above those SBA limits, say the 7.5, it gets a lot trickier. You're really gonna have to ask that person to give a clearly laid out financing plan. They're probably gonna need to bring a bigger down payment, so you're gonna wanna see a bigger proof of funds, but you need to figure out exactly what their plan is on how they're gonna finance that acquisition. So if you're approached by someone who wants to buy your business and you need help, reach out, we'd be happy to help you.